Well, hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, it was a pretty quiet start to August, given the fact that, yesterday, of course, the Nifty ended the month of July with gains of somewhere around 3% or thereabouts. But one trend that's continuing is, of course, that the broader markets are outperforming the benchmarks. Both the Nifty mid and small cap indices ended in the green. I think it was the small cap index which managed to outperform by the end of the day. Sectorally, IT was the top sectoral gainer. In fact, if you look at some of the losers on the sectoral front, you had realty and banks. Those are the two pockets rather, that didn't do all that well. On the Nifty gaining side, you had the likes of Coal India after strong production figures for the month of July. That jumped 13% or thereabouts, and on the back of that, the stock was the top gainer on the index. NTPC, Tech Mahindra, Eicher Motors, M&M, these were some of the other movers. On the losing end, you had Power Grid, disappointing show in the first quarter. That stock was down somewhere around 5%. Hero Moto on the back of ED raid on Pawan Munjal's residence, but of course limited impact on the company, but of course a sentimental impact coming in on the stock there. Apollo Hospitals, IndusInd Bank, SBI were some of the other losers rather. If you look at some of the stock specific movers, of course Maruti was down on the back of the company's decision to buy out Suzuki Gujarat plant from the Japanese parent. Cash outgo concerns and concerns over lesser ROE are some of the issues that are weighing down on shareholders' minds, and that's why the stock was down somewhere around 1% or thereabouts. M&M, July tractor sales came in, it was up by somewhere around 11%, and of course there was a CNBC TV18 news break that the EV division may see some fund infusion from a large Asian fund. So that stock was among the gainers. Yatin, let's talk about the mid and small cap end of the markets. Lots of gainers and losers there as well.
Yeah, so if you look at IDBI Bank, clearly that is one of the gainer in trade today, almost 9% up for that one. Remember, the company is up for strategic divestment by both LIC as well as Government of India. So that process seems to have picked up some steam, probably reflecting the momentum in the stock price. Navin Fluorine, the other one, stock up 7% after strong management commentary in the conference call, allaying concerns regarding the pricing pressures surrounding the specialty chemical as well as the fluoro business. Hindustan Copper continues to rally. Yesterday stock was up 10%. Today another 7% coming in for that stock. Apart from that, we have IRFC, second day in a row, double digit moves coming in intraday. Today the stock ended, however, lower by nearly 6% in terms of the intraday moves. KEI Industries also saw some buying, 6% up for that one, as well as IIFL Finance. That is one stock which has gained nearly 5% ahead of the numbers. So stock specific action continues in the mid cap space as well.
Well, stock specific action in the mid cap space as well. But on that note, let's take a look at the stocks that are on our radar this afternoon. I think starting with DLF, that's one stock that's on my radar, given the fact that the stock has done fairly well over the last 6 months. But of course, today there was a bit of a news flow and the stock was down 3% or thereabouts. Of course, 2.6 crore shares or 1% equity exchanged hands on the bourses in a block deal, and reports suggest that the promoter group may have sold stake. But if you look at some of the other factors that have been working for the stock rather, it's the fact that the first quarter earnings had come out recently and it saw a strong set of numbers, 12% jump in profit on a YOY basis. In fact, if you look at the other news flow, the company is of course making a foray into the Mumbai residential real estate market as well. Remember, the realty stocks of course have seen a turnaround ever since the RBI has doled out a pause. That was in the April policy. That is when the real turnaround came when it comes to some of the realty stocks. And right now, of course, if you look at the next policy, that's next week, we are expecting another pause from the RBI. And once the rate cycle turns, like once the RBI does the much awaited pivot, that is when the real estate stocks will start I would say skyrocketing. But right now I want to also mention the bull run that we are witnessing in the luxury residential market, given the fact that back in Feb it had come out with the project Arbor, and at that point of time it had sold 1137 flats which were 7 crore worth each, and people were queuing up to buy those flats. So that was unbelievable. So that is the kind of demand that is there for luxury residential realty. So that's something that will bode well for DLF. Today it was of course under pressure given the fact that the block deal happened happened at a discount to the current price, but all in all the stock has done very well over the last 6 months, and the future trajectory according to experts looks pretty promising for DLF.
Clearly, then DLF is one stock which has been under pressure after the block deal which took place in trade today. But GAIL, another stock which was under pressure. JP Morgan has come out with a report post the earnings with a target of 115, rating was neutral. Now, JP Morgan believes that the recent rally in the stock price has been probably factoring in a lot of positives. Obviously, this time the company posted a loss of 3,000 odd crores in the petrochemicals business, and probably because of that there were some issues in the overall profitability. If you look at the transmission segment also, there was some bit of pressure coming in. Petrochemicals business posted EBITDA loss, as I mentioned earlier, not 3,000 crores, but slightly lower than that, and probably because of which the stock today again was under pressure. Obviously, if you look at the gas marketing companies, they have been facing some bit of volatility in the COVID period. The gas prices moved up quite sharply, because of which there was some issue or headwinds in the entire sector. But now probably if GAIL is able to stabilize its petrochemical business as well as the core marketing gas marketing business, probably earnings would look up. But according to analysts, the stock is already pricing in a bulk of that.
Right, and the stock of course has run up quite a bit in the last 6 months as well. Well, the next stock on my list of course is Hindustan Copper. I think Yatin did make a mention of it when he was doing his mid-cap check. Of course, stock has hit a fresh 2-year high. In fact, it has extended its gaining streak for the 6th straight session. It's the longest winning streak since March of 2021 for the company, and one of the reasons that could be attributed to this rally is of course the surge in copper prices. Global copper prices are of course at a 3-month high on the back of hopes that there could be some demand revival in China, and there is growing supply risk also coming in from Chile, which is also aiding prices. In fact, copper mining giant in Chile last week itself had lowered its annual production targets as guidance, as well as raised the cost estimates, pushing global copper prices higher. In fact, if you look at the company specific news, there is a bit of a change when it comes to the top management. Ghanshyam Sharma, who's the director of finance, has been appointed the interim CMD. So all these factors boding well for Hindustan Copper. We'll have to see whether or not they come out, they announce or they make some changes in the coming days on as to who exactly will be the CMD. Right now, the interim CMD has been appointed, and the share markets are pretty much pleased with that announcement. Stock was extremely buoyant in today's session as well, up 6 or 7% thereabouts. So we'll have to wait and watch for developments on that front.
Absolutely, and the stock will probably look soft tomorrow because the stock has entered the FNO ban. Let's see if it's finally managed to enter the FNO ban, because the open interest was much above that 100% market wide limit. Obviously, that stock has run up, but shifting focus to the NBFC come financial services space, we have Equitas Small Finance Bank, wherein HSBC has a buy rating with a target of 123. Now, the issue here is that the credit cost guidance could be a key lever of stock momentum moving ahead. However, HSBC today has cut the EPS estimates by nearly 5% for FY25, probably citing weaker than expected earnings to the earlier assumptions. Obviously, the 2% return on assets according to HSBC is quite achievable in the case of Equitas Small Finance Bank, and if they are able to do it, probably from here on there could be some upside to the share price. Recently, if you look at the Ujjivan Small Finance Bank, Equitas Small Finance Bank, AU Small Finance Bank, all of these small bank finance shares have been doing well. But now probably brokerages are again revisiting their estimates, and now they think that the earnings and return on assets is something in terms of return ratios they'll be keenly monitoring today. After this earnings cut, the stock was facing some bit of selling pressure, 3% down, almost ending at the day's low.
Well, some pressure coming in on Equitas SFB there. But with that, we've come to the end of this edition of Closing Bell. But if you have any comments, of course, leave them in the comment section below, and we'll take note of them. But of course, we'll be back with the markets at 8:30 a.m. tomorrow. Lots of earnings to watch out for tomorrow. Titan is the big one that we'll be watching out for. So tune in at 8:30 a.m. to catch as to what to expect from Titan tomorrow. But with that, it's a wrap. Thanks a lot for watching. For more news and updates, stay tuned to Moneycontrol.